Following the Fed, Tesla stock closed in the red. As you guys know, you have seen 13 consecutive green days in a row. This would have made 14. Now, we got new information from the Fed, and we actually got news today from Tesla. Tesla actually raised prices, and not too many people are actually talking about it. This is a sign of good earnings to come. But we have a catalyst right around the corner that's going to be massively important for Tesla. So, long story short, we're going to get into where I think Tesla's going to go. What are going to be some of the positive things? What are going to be some of the negative things that could affect Tesla stock? Ladies and gentlemen, let's get into this video. Hit the like button and subscribe to the channel if you like to make money, if you want to stay up to date with everything happening in the markets, as well as grow your net worth, and last but not least, reach financial freedom as quickly as possible. And last but not least, because you want to support the channel and you learn something out the videos. Now, let's get into kind of a recap of the Fed. We're not going to dive extensively into what Fed Jerome Powell said because he really didn't say much. It was basically a whole lot of nothing. Some people would call it a nothing burger. Well, the summary of economic projections was far from a nothing burger. Long story short, essentially the Fed thinks that interest rates need to go higher. The Fed thinks we need 2 more interest rates to get to a neutral rate, or a terminal rate, I guess I should say, of 5.6%. The last summary of economic projections was in March, and they were forecasting 5.1%. So that indeed says the Fed's going to raise rates, the average consensus at least, 2 more times in 2023. GDP projections went from 0.4% to 1%, extremely positive for the course of the economy. The unemployment rate went from 4.5% to 4.1%. But PCE on a core basis, the expectation went from 3.6% to 3.9%. Headline PCE and expectations went from 3.3% to 3.2%. So what can we draw here? More rate hikes, sticky inflation, better economy. What's the ultimate conclusion there? It's going to take a lot longer to see rate cuts. And that is something that is negative for Tesla's business. Now, what happened today in Tesla stock? It was very volatile. Tesla dropped over 3.5% once this initial statement came out. Tesla dropped from $258 to $250.50 per share. And we'll talk about the significance of this drop and where Tesla ultimately found a bottom. But investors were reacting directly to the terminal rate needing to go higher, to more interest rate hikes. But they did not consider the other side to this. And the other side to this is a better economy. Now, I've talked about this before in a couple videos, so I also don't want to stay on this topic too long. But would you rather have a recession and lower interest rates, or would you rather have higher interest rates and no recession? If you say a recession and lower interest rates, then maybe this isn't the channel for you. Or maybe you should stick around a while so we can all help each other get educated, because Tesla's core business of selling vehicles is not going to do well during a recession, at least not to the stock market's expectations of, 50% delivery growth year over year. That's not going to happen if people are losing their jobs. So in a weird way, or in a pretty straightforward way, I should say, this was a win for Tesla. The 2 interest rate hikes that we get, that's nothing fundamentally kind of different down the line compared to what we're seeing now. You've already seen rates go exponentially higher than where we thought they were going to go. It's not a big change. 2 more rate hikes, fine. We were doing 50 basis points at a time in 2022 and 75 basis points a couple times. Not a big deal. But if the economy does perform in line with what the Fed thinks, then the markets thinking that we're going into recession with a 65% probability, that needs to come down. Now, that has been a negative factor on Tesla stock the whole time. It currently is. It was a negative factor on Tesla in 2022. So I think based off of recession odds going down alone, that is valuation support for Tesla. That is very positive. Now, you know what's the biggest form of valuation support for Tesla? Good deliveries and good earnings. And we just got a massive implication or hint that Tesla's going to report some rock solid earnings for Q2. But first, we're going to get the delivery numbers. And that's going to come here around July 2nd. Wall Street is currently expecting Tesla's Q2 delivery numbers to be 445,000 units. That would blow past the all-time high for Q2, in which the all-time high for Q2 in the past was around 250,000 vehicles. So you're expecting a blowout quarter from Tesla, but this is actually down a few thousand deliveries just over the past couple of months. So expectations have actually come down just a little bit, and that makes it a teeny weeny bit easier to actually be on those expectations. Now, the data that we've gotten out of China, I probably don't need to say this, but I'll say it again for anyone that does not watch all of these videos. Tesla delivered 77,000 vehicles in the month of May alone. If you just did a rough guesstimate and said 60,000 vehicles were delivered in 3 months for the entirety of the quarter, that'd be around 180,000 vehicles. Round that up, round that down if you would like. Nonetheless, you're going to have some rock solid delivery numbers. Now, we can kind of get a feel for this based off of how Tesla prices their vehicles, okay? So Elon said at the last earnings, he said, quote, "Our finger on the pulse is real time and does not have latency. Other car companies have a lot of latency in their data." And he goes on to say that automakers reprice their vehicles, right, all the time. But they get data from car dealerships that's lagged behind what their actual sales are doing. Whereas Tesla sells directly to consumers, so they see in real time, are people buying more? Are they not buying more? Should we raise prices, lower prices, so on and so forth. So they adjust a lot more often. Well, you actually seen Tesla raise prices today. And it wasn't by a huge margin. It wasn't a whole lot. But this is very positive. Every time Tesla has raised their prices, which bottomed on April 19th at about $50,000, now it's where they are right now at about $50,500. That $500 per car will make quite a difference coming on earnings. Now, Tesla actually raised their price about $250 today. And that is tracked through an archive of the Tesla website that Barron's keeps. So you guys can actually click on this and look at that for yourselves. But nonetheless, when Tesla is raising their prices, that means they're seeing really good demand. And after these price cuts that we've kind of seen since 2022, which reasonably so, you were at $66,000 in October of 2022 for a Tesla Model Y long range. I mean, it's come down by about 25%. It's a good thing prices are not still coming down because Tesla does have really good margins. They could afford to cut prices more if they really needed to spur demand. Now, I also reported on this in the last video as well. This is a piece of news that came out today, and we'll just talk about it here briefly before we get into where Tesla is ultimately going to go from here, in my personal opinion. Keep in mind, I'm not a financial advisor. I am not a financial planner. I do not have a crystal ball, even though we called out this rally almost perfectly with Tesla. You ultimately don't know what's going to happen in the markets, and it's very uncertain. Now, France is basically begging Elon to build a factory in France. They said, quote, "It will be great to have a Tesla factory in France. There has been a lot of effort and energy to make sure this is possible and that this can happen." They also say, quote, We have also invested in an entire sector of electric batteries, so we will try to convince him that France is the best possible place in Europe to establish the next Tesla factory. This probably comes with some perks if they really want to get Tesla to build a factory there. It probably comes with some subsidies. It comes with something, okay? And if they do choose to go there, well, it would make sense. It would make sense to do multiple factories at this point. I don't know when announcements of those kinds would come, probably on the next earnings report or next investor day or something along those lines. But this is kind of a good sign. Tesla, specifically Elon, has just invited Toyota to join Tesla's new coalition of partnerships to charge their vehicles. Now, the invitation came on Twitter after a user mentioned a news article showing that taking a trip in the new all-electric SUV from Toyota was a battery charging nightmare. Quote, Business Insider drove the new Toyota BZ4X EV from New York to Washington, D.C. and back, wrote on Twitter on June 14th, which is today. It says, a self-described Tesla investor and fan, the 9-hour drive involved 3 hours of charging, even at 37%. The BZ4X refused to pull more than 35 kilowatt charging speed. A Tesla Model Y would need to charge a total of maybe 30 minutes the entire trip, he added, with a link to the article. Musk then took the opportunity to encourage Toyota to do what Ford and GM did. Quote, they should join the NACS coalition, the Techno King as he's known at Tesla. He commented, Toyota obviously did not respond instantly to a comment, but hey, this could be another big catalyst. Elon says, quote, we built the supercharger network out of desperation since no one else was doing it. Basically saying that, hey, Toyota, you're not going to be able to do this on your own. You're going to have to partner. And that would be a positive thing, again, for Tesla. It would help solidify that they're really not going to have competition for their for charging, right? Tesla's going to own the pickaxe and shovel industry of vehicles, which is the charging, right? Everyone that buys a vehicle, electric vehicle, will have to charge. Now, if we look past some of the news that is happening today, some of the stuff with the Fed, Tesla is still vulnerable to seeing a short squeeze here. Now, like we said in the beginning of this video, Tesla bounced almost perfectly at $250 per share. It's currently at $256 per share. I don't think Tesla is going to materially fall under $250, and that's a problem for the shorts. If Tesla can remain above $250, trade sideways, or even trade higher, that's going to start to force shorts out of short positions, especially heading into July 2nd. Short sellers know that there is a chance on July 2nd, Tesla reports much better deliveries than expectations, and the stock could rally 10% on that day. At this point, shorts, simply put, cannot afford for that to happen. The dollar amount currently sold short in Tesla is up 54% in the last 3 months. Shorts are down over $10 billion in their short positions, currently holding $23.64 billion in shorts. Those are numbers that you just don't want to hear if you're a short. That is not a loss that you want to take. And in relation to where Tesla is and its all-time high, it could rally much higher. Now, Tesla and AI. Tesla is kind of seen as a car company and also an AI play with robotaxi. Now, if Tesla starts to rally to the same degree as a Nvidia is, for an example, if you look at Nvidia here today, I mean, it's at a new all-time high. It took a little bit of a breather and has continued higher, hitting a high of $430 per share. If Tesla really does have its ChatGPT moment, like Elon says is likely by the end of this year, if not the beginning of 2024, then you most certainly wouldn't want to be short in Tesla. Now, Tesla's major catalyst is going to be around July 2nd when they give out those delivery numbers. And leading into that, you probably see somewhat of a rally, right? Just depending how markets take the most recent Fed information that we got and extrapolate that into, Tesla, if they want to focus on the economy being better as a good thing for Tesla, or if they want to focus on more rate hikes being a negative thing for Tesla, I think that does have implications here in the short term, besides any potential good news or bad news that we do get. That's something that's going to have a positive or negative impact on the stock. But into July 2nd, you probably get a ramp up of Tesla just as shorts go to cover on short positions alone. Now, you've also seen a lot of bullish option activity as of recently, and a lot of the open interest is held at that 250 strike, right? 250 strike to the upside. A lot of that call open interest. Now, a lot of open interest as well is held around 270 for Tesla and 260. Just on the day today, you've seen almost 200,000 $260 calls expiring this Friday purchased. That's insane. Typically, when the volume is that much higher than open interest, it usually signals the stock is going to go higher. And open interest for the 260 strike, 260 call for this Friday was 22,000, almost 23,000. You've seen almost 200,000 for volume. That is a lot. That is a lot. Okay. So that is signaling Tesla's probably going to go higher from here. If you take a look at the positive order value for the day, that is at 68%, in line with what we've seen over the past week with the positive order value that was sitting at 71%. Signs are clear, even considering the bounce that we've seen at 250. Tesla, in my opinion, is going to go higher from here. Now, I also at the same time expect Tesla at some point to trade sideways or in between 250 and 260 for a couple days at least to get this RSI to come down a bit before July 2nd. So that could happen this week. Tesla could trade between 250 and 260 the remainder of this week, part of next week. It could start to rally the end of next week and the following week. That's always a possibility. But in the next couple of weeks, it makes sense to be long on Tesla. Even some options does make quite a bit of sense heading into and after the July 2nd catalyst. Me personally, if I was buying options on Tesla, I'm at least going to go out to the July, but better yet, the August expiration. I think that's where you can get more bang for your buck, especially after today, where Tesla is now red for the first time in the last 14 trading days, guys. So that's kind of my expectation on a worst case scenario. If the markets did take what the Fed said today and kind of run with that as a bearish thesis, well, 225 is going to be support at this longer term line of resistance. I wouldn't expect the stock to fall under that by any means. And if it did come down to that, that would be a magnificent buy the dip opportunity. But I mean, I've been buying the stock the whole time. Recent developments have made me much more bullish on Tesla, specifically when Tesla said they would start to advertise. I think Tesla is going to open Tesla up as a brand to hundreds of millions of people when they go to advertise. That is what is going to increase Tesla's order book by, ratios that Wall Street cannot even fathom right now. You could see the order book for Tesla increase 5 to 10x in the next year or two. You could turn from a demand problem to a production problem, and Elon and Tesla trying to build as many factories as possible. Simply put, the technology in with Teslas is far superior than any other vehicle out there, and there's a lot of reasons to want to own Tesla. Charging, technology, efficiency, the cost of owning a Tesla, full self-driving, those are some of the reasons, not to mention tax credits and everything else, guys. So that is going to do it here in this video. Let me know what you think about Tesla and how Tesla is going to perform over the next couple of weeks down below in the comment section. Thank you for watching, and I will see you in the next one.